All right. So let's start with GBP First, I want to appreciate you for joining the class. Please, if you have any pair you are considering trading, please drop it in the comment section so that we can look at it together. So let's start by looking at GBP That's the first pair I want us to look at, GBP because I know GBP is preferred pair of many traders. So we'll start by looking at GBP Okay, so let's see how yesterday candle closed. I think yesterday GBP was bullish yesterday, and you can see today it is still bullish. It is still bullish, but my bias for GBP this week is bearish. So I'm waiting for a bearish setup before going bearish on GBP. Okay, as you can see on the weekly, on the daily time frame, this is the daily time frame. This would have been the best price to buy GU. This would have been the best price because we had an engulfing, this is an engulfing pattern, okay? We had a spinning bottom here. Also, this is a spinning bottom, and the next candle closed bullish. So this would have been the best price to buy GBP Now, GBP is trading at 1.3373, which is about 150 pips, no, 250 pips from this level. That's the reason I wouldn't be buying GU. I should have bought GU from this point. And now it is trading 250 pips above this level. So before buying GU, I want to see price pull back. There should be a retracement. I cannot be buying at this price. The price is very high right now. So it will not be reasonable to buy at this price. So I'm waiting for GU. I'm waiting for a pullback on GU. I'm waiting for a sell opportunity on GU. So what should we look out for on GU today? We should wait for a bearish reversal pattern to form on GU. We should wait for a bearish reversal pattern to form on GU. Please mute your mic. Please mute your mic. I believe you all know the bearish and bullish reversal patterns. For bearish reversal pattern, talking about shooting star, bearish engulfing pattern, hanging man. Those are the patterns you should look out for on 4-hour time frame for today's market. Shooting star, hanging man, and engulfing pattern. Also look out for doji and spinning top. When a doji or spinning top forms on a 4-hour time frame, it's an indication that the trend is about to change from bullish to bearish. As you can see here, this candle, this is an hanging man. This is an hanging man, but this is a bullish hanging man. And after the formation of a bullish hanging man, you have to wait for the next candle to close bearish before you sell. Are you getting me? You have to wait for the next candle to close bearish before you sell. But as you can see, the current candle, today's candle is still bullish. So let's go down to 4-hour. Like I said, just wait for a bearish reversal pattern to form on 4-hour before you go bearish. You can see here we had several bearish reversal pattern here. We had an hanging man, spinning top. You can see. And I think what has played out so far in the market now, after the formation of all these patterns, you know, a lot of retail traders would have executed sell after the formation of this pattern. This candlestick, this was the previous 4-hour candle. This is a spinning top, right? You know, a lot of retail traders would have jumped in and start selling after the formation of this spinning top. So I think what they've done is to clear liquidity residing at this previous high. Also, last night, a lot of retail traders, because of this pattern we have here, this is a reversal pattern. A lot of retail traders would have jumped in to sell last night, and their stop losses would be residing at this high, this previous high. And also this morning, a lot of retail traders would have jumped in to sell after the formation of this spinning top, and their stop losses would have been this high or a few pips above this high. So I think what they are reading right now is liquidity, stop losses. That is what they are reading right now. They are sweeping liquidity residing at this previous high. Now they have achieved that. And my students, you know what you should look out for. You should look out for a reversal pattern on 4-hour. The reversal pattern. Now, for those of you that are new to trading, you need to learn the basics of Forex. For those of you that are new to trading, because I posted the link on some groups, and I know most of you in that group are are new to trading, please mute your mic. You are new to trading, so you need to learn the basics of Forex trading. You need to know how to identify these candlestick patterns, the bearish and bullish patterns. You also need to know how to identify support and resistance. So if you are a new trader, you don't know how to identify these patterns, you don't know how to identify resistance and support, you don't know what leverage is, you don't know what PIP is, you don't know the different market session, please ensure you participate in the next webinar. Okay, the date and time will be posted in the group. Ensure you participate in the forthcoming webinar. The dates and time will be posted in that group. You need to know the basics. Okay, so let's go down to 1 hour. So on 4 hour, just wait for a bearish reversal pattern to form. My bias for GBP USD today is sell. It is sell. I'm looking for sell. I am looking for sell opportunities. So just wait for a bearish reversal pattern to form before you go bearish. Also, a major news will be released by 2:45. Consumer confidence will be released from the United States by 2:45 p.m. Okay, so I believe before that time or after the news is released, we would be able to find a bearish reversal pattern on 4-hour time frame. Either a few hours to that time or after the news is released, there would be a bearish reversal pattern formation on the 4-hour time frame. That is when you should consider selling GBP USD. I hope that is clear. If there's any pair you want us to look at together, please drop it in the comment section. I believe you all can hear me. Okay, yeah, we'll look at gold and and Euro Aussie. All right, we'll look at gold and Euro Aussie. I believe you can hear me. Am I audible? Any question? If you have any question, please drop it in the comment section. Drop it in the comment section. If you have any question, drop it in the comment section. Okay, so let's see gold. Max said we should look at gold. Let's look at gold. Gold has been bullish for some time, but I'm expecting gold to sell. Though it's been bullish, I'm expecting it to sell. That is my bias. I can't buy gold at the current market price. Like I told you guys, when you open the chart, the first thing you need to look at is where price is coming from, where it is right now, and where you think it's going to go to. Are you getting me? Those are the 3 things you should look at. Where is price coming from? Where is it at the moment? And where is it likely to head to? Those are the 3 things you should look at for when you open your charts. Now, if you look at gold, gold has started buying for months now. It's been bullish for months. You can see from this point, you can see over a year, gold has been bullish. You can see that for weeks, gold has been bullish. Now, one could have entered buy at this point. One could have bought at this point. Now, if you didn't buy at this point, you had another opportunity to buy after this little pullback here. If you didn't buy at this point, you had another opportunity, maybe at this point. So entering at this point is very late. The risk you'll be taking if you had bought from this point will be very late. So if you didn't buy from this point, this was the first opportunity, second opportunity, third opportunity. If you didn't buy at any of these areas, why would you want to buy at this point? The price is very high. Now, do you buy stuff when price is high? Do you buy a product when you know that the price is very high? No, you can't buy. If you want to buy, you need to wait for the price to drop, right? You need to wait for the price to drop before you buy. Now, looking at the chart, we know that gold has been bullish for some time. And since we didn't catch the trend, since we didn't catch the movement, we have to wait for price to pull back. So this is not the right time to buy gold. If you buy gold, you'll be taking a very high risk. You would be taking a very high risk. If you are considering buying gold, you should wait for price to pull back to a discount area before you consider going bullish on gold. Are you with me? If you are considering buying gold, you should wait for price to pull back. Excuse me, please. Okay, so you should wait for price to pull back. So you can see what is happening on the weekly. Let's go down to daily. We have to work with daily time frame as day traders. So you can see what is happening on the daily. Now, the previous candle closed as a spinning top. This is a spinning top, but this is a bullish spinning top, right? This is a bullish spinning top. So we need to wait for this next candle, this daily candle. If today's candle closes bearish, it's a strong confirmation that gold is likely going to be bearish tomorrow. Technically, okay, then we should expect more bearish move on gold this week. Okay, so what should we look out for in today's market? What should we look out for in today's market? Okay, so you can now here we have this is a bearish candle. Liquidity was swept at this previous high. Liquidity, stop losses. A lot of retail traders would have entered sell after the formation of this. This is a shooting star. This is a shooting star candle. Okay, a lot of retail traders would have jumped in and sell. So and their stop losses will be at all the stop losses you can see. And this next candle closed bearish. It closed bearish. So let's go down to 1 hour. So this is a bearish setup, but not a valid bearish setup. You can see that price couldn't break this support. Price tests this support. You can see we had a support here, and there was strong reaction at support. If price had broken this support, it indicates that supply has exceeded demand. But since price don't break this support, it indicates they have traders are still willing to push price up. There's a high probability that price might still go up. So if you are considering selling, like I said, don't buy gold. This is not the right time to buy gold. You should wait for price to pull back to a discount area before you buy gold. So if a candle closes below this support, you can sell gold today. Are you with me? You can sell gold today if a candle closes below this support. Now let's go down to 1 hour. So on 1 hour, let's see. Okay, this is what we have on 1 hour. Good. You can see what we have on 1 hour. This is an engulfing pattern on 1 hour, right? This is an engulfing pattern which indicates change in trend from bullish to bearish. Okay, but as you can see, this support is yet to be broken. Can you see? Some will call this double bottom. You can see this is what is holding price right now. So before we sell, like I said, patiently wait for price to break this support, or after the formation of this engulfing pattern, I believe a fair value gap was created. After the formation of this engulfing pattern. So you either wait for price to pull back and fill that fair value gap. Let's identify that on 15 minutes. Okay, good. Can you see the fair value gap? This is the fair value gap that was created on 15 minutes time frame. So you either wait for price to fill this fair value gap before you sell. Now, when price fills this gap, you should wait for a bearish reversal pattern to form inside this gap. You don't just jump in because price entered or filled this gap. You don't just enter sell. You need to wait for a bearish reversal pattern to form. It could be on 5 minutes. It could be on 15 minutes. It could be on 1 minute. Wait for a bearish reversal pattern to form, or wait for a candle to close below the low of this fair value gap before you sell. Don't just jump in because price just hits a fair value gap. That is not how to trade. That is not how to execute. Okay? You should wait for a bearish reversal pattern to form below the low of this fair value gap. So what are we looking out for on gold? Either price pulls back to this zone for us to sell, or price breaks out from this support. Now, if price breaks out from the support, what you need to calculate is the risk involved. You have to be comfortable with whatever risk you're taking in the market. Are you getting me? You have to be comfortable with whatever risk you're taking in the market. Now, if price breaks, let's assume a candle closes below this level and we decide to sell, your stop loss must be this high. The high of this candle, this is where you set your stop loss, which is 178 pips. That risk is very high. So are you comfortable taking 178 pips risk? If you use 0.01, which is the minimum lot size, that will be $17.8 loss if the trade goes against you. If that is more than your maximum daily drawdown, maximum daily risk, then you shouldn't take the trade. You should not take the trade. Are you getting me? This is 178 pips. But if price pulls back, let's assume price pulls back to this area and we decide to sell from this, let's assume from this point, and we'll set our stop loss using this. So our stop loss will be, say, 60 pips, let's say a few pips above this level. So we can just set our stop loss using 60 pips, which is okay, 60 pips. And our first TP, if we set our first TP here, this is about 120 pips. That's like risk reward 1 to 2. Are you getting me? So you should wait for price to pull back. For those of you who are trading with small capital, for those of you trading with small capital, $100, wait for price to pull back. If you're trading with small capital, you want to ensure that the market risk you take on every trade is very small. Is very small. Are you getting me? So wait for price to pull back to this area before you sell. That is my take on gold. I am bearish on gold today. Technically, I am bearish on gold. I hope that is clear. Then the next pair I said we should look at is on which pair again? Euro Aussie. Okay, let's look at Euro Aussie. Let's look at Euro Aussie. I hope you guys can hear me. I hope you guys can hear me. If you have any question, okay, on the pairs we've looked at, please let me know. If you have a contrary view, just raise your hand up so that I can unmute you. If you have a contrary view, let me know. Okay? We are here to learn. Okay? So Euro Aussie. Okay, let's look at Euro Aussie. So Euro Aussie, it's obvious. Euro Aussie. Let's start with the daily. See how yesterday candle closed. Bearish candle. I believe yesterday move was to clear liquidity residing at this previous low. That's the reason for the bearish move. I believe that's the reason for the bearish move we experienced in the market, or we saw in the market yesterday, was to clear stop losses residing at this previous low, and that they have achieved. So today's candle so far, it has been bullish. It has been bullish. So I'm looking for buy opportunity on Euro Aussie. But as you can see, price has already moved. So you can see what we have here. This is an engulfing pattern. Liquidity was cleared. Liquidity residing at this previous low was cleared. And the pattern that formed after liquidity got cleared is an engulfing pattern, which is a bullish engulfing pattern, right? So after the formation of the bullish engulfing pattern, I believe a fair value gap was created. This is 4 hour. The fair value gap was created. So I would suggest that you wait for price to pull back. Let's go down to 1 hour. So you can see on 1 hour, a fair value gap was created here. This is the fair value gap. So patiently wait for price to pull back to this fair value gap before you buy. Okay? Patiently wait for price to pull back to this fair value gap before you buy. Let's go down to 15 minutes. I believe they will still have a fair value gap below this fair value gap on 1 hour. Let's see on 15 minutes. There should be a fair value gap below that. Okay? So we still have another fair value gap. You can see this fair value gap. So these are the areas you should consider buying. Okay, these are the areas you should consider buying on Euro Aussie. So if price drops to this zone, fills this gap, and the bullish reversal pattern forms after price fills this gap, then you could buy. But if price breaks this gap, closes below this area, then there's a possibility for price to come and fill this fair value gap. Okay, then when price hits this zone, wait for a bullish reversal pattern to form. Don't just jump in and start buying because price has hit this area. Wait for a bullish reversal pattern to form before you go bullish on Euro Aussie. I hope that is clear. That's my take on Euro Aussie. Entering Euro Aussie at the current market price is at a very high risk, because if you are buying from this point, your stop loss will be this point. This is 112 pips. For me, this is too high. The risk is too high. So I would patiently wait for price to pull back. Let's assume price pulls back to this area. I decide to buy from this area. My stop loss will be here, which is still okay. 56 pips is still okay. It's still okay. But if price breaks that zone and comes to this area, I decide to buy from this area. My stop loss, I'll just set it like 10, 15 pips below this level, which will be 40 pips. And my first TP will be this high. So that will be risk reward of 1 to 2 or 1 to 2.5. Okay, so don't buy Euro Aussie at the current market price. The risk is high. The risk is high. Okay, Mr. Joseph says we should look at Euro Aussie. I hope that is clear, Mr. Max. I hope that is clear. I hope that is clear. So let's look at New Zealand USD. For some time now, I've not looked at New Zealand USD. Do I even have it on my chart? Okay, let me add it. Let me add it to my chart. New Zealand USD. Okay. Can you guys still hear me? Can you hear me? Can you hear me? Okay, so this is a few minutes correlated with GBP USD. So if we are considering selling on GBP USD, we should also be considering selling New Zealand USD. Okay, we should also be considering selling New Zealand USD. Okay. So let's start with the daily. So as you can see, this is what we had on a daily. Can you see what we have here on a daily? So at this point, this is a shooting star. This is a shooting star candle. Now, after the formation of this shooting star, this is a bullish shooting star. The next candle closes as a spinning top, a bearish spinning top. So one would have sold New Zealand USD after the formation of this pattern and would have made good profits on this trade, right? You would have made some good profit on this trade. So right now, the market is currently trading at this price. This is what I think is playing out in the market right now. This is what I think is playing out. Now, after the formation of this shooting star, if we go down to, let's say, 4-hour time frame, it could be that a fair value gap was created after the formation of this shooting star on 4-hour time frame. That is why price had to pull back. But let's confirm. Let's confirm on 4-hour at this point. Was a fair value gap created? Let's go down to 4-hour to confirm that. We'll go to 4-hour and also 1-hour. So you can see on 4-hour, was a fair value gap created at this point? No fair value gap, right? I think there is a tiny fair value gap. A tiny fair value gap was created here. I think we had a very tiny, a tiny fair value gap was created at this point. Can you see what's happening in the market? Can you see? A tiny fair value gap was created at this point. Can you see it? There's a tiny fair value gap here, but let's go down to, we'll see it clearly on 1 hour or 15 minutes. 1 hour or 15 minutes, it will be clear. Okay, good. So you can see on 1 hour, you can see there is a fair value gap, I think. Okay, we still have a fair value gap here on 1 hour. Okay, we have a very tiny fair value gap here. Then on 4-hour, okay, on 1 hour also, we had a fair value gap here. And I think the market is currently, you can see, price is currently in between this gap. Can you see the gap? Price is currently in between this gap. You can see these are the reason for the current pullback we're seeing in the market. Price wants to fill these gaps. Okay, price wants to fill this gap. That's what I think is playing out in the market right now. Price wants to fill this gap. Can you see that? It filled it yesterday. Can you see? It filled it yesterday. This was yesterday candle. It filled it yesterday. And this morning, you can see this candle this morning has already filled that gap again. Okay, but price is currently trading. Probably after the formation of this shooting star, it's likely a fair value gap was created also. And that's the reason for this pullback. Let's go to 1 hour to confirm that. Okay, let's go to, what's it called? 15 minutes. So just wait for a bearish reversal pattern to form. Okay, so this is 15 minutes. Okay, no fair value gap here on 15 minutes. Okay, so just wait. But if you apply, what's it called, your Fibonacci, since there's no fair value gap, you can work with your Fibonacci from this swing high to this swing low. Wait for price to pull back to premium. And as you can see, price is at premium at the moment. So all you need to wait for is a bearish reversal pattern to form. Okay, wait for a bearish reversal pattern to form. You should close below this low, the low of this value gap, before you sell. That's my take on New Zealand USD. Wait for a bearish reversal pattern to form. Wait for price to close below this low, this level, before you go bearish on New Zealand USD. That's my take on New Zealand USD. My bias for New Zealand USD this week is bearish. My bias for New Zealand USD today is bearish. Okay, wait for a bearish reversal pattern to form before you sell. It is still bullish. You cannot sell. It is still bullish. Wait for a bearish reversal pattern to form before you go bearish. Any question so far? Any question so far? Do you have any question? Is there any other pair you still want us to look at? Let me know in the comment section. If there's any other pair you want us to look at, let me know. Let me know if you have any question. For those who are new to trading, like I said, you need to learn the basics of Forex, and we'll be teaching you that for free. We would be teaching you that for free. If you are to pay me to teach you how to trade Forex, it will cost you not less than $100,000. But because you are registered with Cabana Capitals, we would give you access to the training for free. For free. So you should register if you have not registered with Cabana Capitals. And like I said, the dates and the time for the forthcoming webinar will be communicated in the Cabana Capital Fitness Financial Fitness group. Okay, to be communicated in that group for those who are new. The class is for new traders, not for experienced traders, new traders. Okay? Any question? Do you have any question? Any question? Mr. Joe, any question? No question. So that will be it for today's session. But let's look at JPY. Let's look at JPY. JPY has been bullish. US JPY is bullish also. A long time. I said it yesterday that GJ, UJ is bullish. You can see the trend line that I plotted on GJ. I think I plotted this trend line on, is it 4 hour or 1 hour time frame? So price has been respecting this trend line. You can see price has been respecting this trend line. GJ, UJ, JPY pairs are bullish. They are bullish. Okay, JPY pair are bullish. So far today, I think JPY has done over, today is 24th. JPY has done over 100 and something pips. Yeah, today. Yeah, it has done over 200 and something pips today. That's a huge move. So UJ is still very bullish. Okay, it is still very bullish. UJ is bullish, GJ is bullish. Any question? Well, this is not the right time to buy, please. It is not the right time to buy. It's overbought at the moment. You can see where it started going up, see where price started going up. Let's even go to 4 hour. It's been bullish for days. You can see this is where it started buying. So this is where one should have entered. You should have bought from this point. If you had bought from this point, and probably you took this risk, this is about 207 pips. Now you would have made close to 217 pips. So you buying at the current market price is at a very high risk. So if you want to buy, wait for price to pull back. You could apply your Fibonacci, take it from this most recent swing low, which is the most recent, this is a higher low. I take it from this swing low to this swing high. Okay, wait for price to pull back. Wait for price to pull back to a discount level before you buy. Don't buy from the current market price. It is very risky. The risk is very high. I hope that is clear. I hope that is clear. Oh, someone said he has a question. I'll mute your mic if you have a question. Mr. Joseph, let me take a question before I end the session. I'll mute your mic if you have a question. I can hear you. Go on, morning.
Now my question is on that NZD.
I can't hear you clearly. I can't hear you clearly. Move close to the mic.
Okay, I said my question is on that NZD.
Okay.
Can you hear me now?
Yes, better.
Okay, I said my question is on that NZD USD.
Okay.
Now you said we are looking for a bullish move on NZD bearish move on NZD USD.
Yes.
Yeah, but I want to confirm the long time trend. Is the long time trend bullish?
Let's see. Let's check. Let's start with the weekly to know the long-term trend. I think it's bearish. I think it's bearish.
Okay.
Long time is bearish because price you can see on this weekly time frame. This weekly time frame. You can see if you apply your Fibonacci from this swing high, to this swing low, you would agree with me that price is at extreme premium.
Okay.
Right? Is at extreme premium. Now, when you say long time, I don't know how long, right? I don't know how long. So as you can see, a fair value gap was created here on the weekly here. I think if you go down to daily, there's a fair value gap here. So there's a high probability that price is likely going to pull back. This is weekly. A fair value gap was created here. So it's possible price will pull back to this area. So if you are considering buying, then you should wait for price to pull back. Are you getting into a discount area before you consider buying? So look at daily. This is where price started going up. If we apply our Fibonacci from this swing low, let's just take it from this swing low to this swing high. We want to see price pull back, right? We want to see price pull back to a discount area before we consider buying. We cannot buy from this current market price. Are you getting me?
Yes, sir.
So that's my take on it.
Hello, sir.
Yeah, I can hear
Hello,
you.
sir. Okay. Now, just my thoughts.
Okay.
Now, you said that the long time trend is bearish. But if going by the weekly time frame, let's go to
Yes.
the weekly time frame. Okay, please can you remove this Fibonacci?
Okay.
Okay. Now, looking at this chart now,
Yeah.
we notice that initially this pair has actually been on a bearish move. It has been doing series of I think
price look at, if we go by this weekly now, this is a ranging market from this point to this point. This is a ranging market from this high to this low.
Okay.
That's been in a range.
Okay.
Okay.
Okay. Because I actually observed that at this point where your cursor is now, if you come down, it looks like we are having something like a double bottom there.
Yes.
And double bottom here. And I think that should be the reason why price actually make this move up.
Good. So this is where you ought to have entered. If you want to play with double bottom, you should have entered from this point. This would have been your entry for buy. And now the market is currently trading at this point. So do you think it'd be wise to buy from this point?
No, it will not be wise to buy. But I am thinking that, you see, this week now, where it looks like a curve, where we get that curve, there is those 2 week that are there, those two candlesticks.
Which candles this?
No, come down to the middle, where we have that curve. There is a bearish and a bullish, yes, around that place.
Okay.
That two, this the obvious week that is there now. You know,
this
that one. Point now, that point is a kind of resistance that has been broken.
You mean this high?
Yes. That
Yes.
zone, that area is the resistance that have been broken.
Also be that this bullish move so far here was to clear liquidity residing at this high.
Okay.
This bullish move, it could also be to clear liquidity residing at this previous high. And what happened, I think this candle tested a resistance level. Let's see. This is the resistance level. Okay, it has not hit that level. So we have
Okay.
a resistance on here. This is a